What's up, everybody? Welcome to Liberate Your Money, episode 38. It is May 23rd, 2021. It's a rough day in the crypto markets. It's been a rough couple weeks. We're going to talk about everything that's been going on right now and just kind of give you my thoughts on the marketplace. Past couple weeks have been brutal. Looks like this is a temporary top in the cycle. We've had a 50% pullback from the top, and there is lots of fear in the marketplace, guys. We've had a 54% correction, and most people on Twitter, in the crypto Twitter sphere, think it's over. They think the bull run is over and we're about to enter in a 3-year bear market before the next cycle returns. We're going to take a look at that. It's certainly a possibility. Me personally, I don't think that's the case, but we're going to go over that in this YouTube video. So hang with me here. I hope all you guys, if you're down bad, just know that you can make it all back. Money isn't everything. You shouldn't be playing with money that you can't afford to lose in the first place. So if you are, maybe this is a wake-up call for you. This should be money that you either have, if it is that important to you, you should have had a stop loss. And if it's more like a savings account to you, like it is for me, then you should know that these pullbacks are pretty natural in the crypto sphere. We don't get these exponential gains without having 50% pullbacks. So let's talk about the FUD that's going on right now, because right now we are seeing one of the most, I've been in crypto for 4 years, and I was on the back half of the 2017 cycle, and there's a lot of FUD. Once markets turn, there's always FUD coming out. There's always China FUD. There's always just ridiculous articles coming out that just are not even really factual. They're just there to spook people and spook investors, and you gotta wonder who's putting out these articles. Travis Kling, for not following him, he said, you gotta understand where we're at in this market right now. We got the literal Pope sneak dissing Bitcoin, and the Pope, last week, a few days ago, had a tweet. He didn't directly say Bitcoin, he didn't directly say crypto. What he did say was, new technology that is carbon intensive needs to be delayed or stopped immediately, yada yada yada, save the world nonsense. Well, the FUD is coming from all angles, guys. He's saying that, this guy's been in traditional markets for a while. He's got a lot of connections in traditional marketplaces, in the crypto marketplace. And he's saying that OG traders are telling him that this is the most coordinated, multifaceted FUD campaign they've ever seen. Now, that's a huge statement to me. And when you look at the crypto articles being printed out the past week, I mean, look at it. They're all using the same fucking jargon. They're all boasting about the same shit. It's just like a mass FUD campaign. Whether it's coordinated or not, it's terrible journalism, and it's see-through. We can see what's happening, and you gotta wonder who's behind it. Meltem seems to think that Ripple's behind it, and I could totally see that. A company that's trying to compete with Bitcoin that has way too much money, and all these articles, all of these news sources, what do they care about? They don't care about Bitcoin, they care about money, so it could easily be coordinated. But the fact that we had Elon Musk, the Pope, China banning, what did they ban? They banned, the China banning thing was actually bullish for Bitcoin. So what happened in China was, there was news that, Bitcoin's banning mining, China's banning Bitcoin mining. Well, what they were doing was actually, they were talking about restricting mining that was done from coal or carbon intensive ways. So that actually, it's good for two reasons. One, it's gonna reduce the carbon impact from Bitcoin mining, because most of the carbon impact comes from mining in China, because most of the mining that's done in developed countries like the US are actually done with renewables, and a big bulk of it in China is actually done with hydro as well. And if China is going to restrict the carbon intensive mining, it's good because it reduces the carbon footprint of mining, and it also reduces the leverage in the amount of mining being done in China. So they don't control as much of the hash rate. So the fear of them 51% attacking the network is less because they're actually giving up some of their mining. So I think that's actually bullish for crypto, but like whenever news like that comes out, it's going to be taken as bearish, you know, on top of the fact that, you know, we just broke technically this trend, right? I mean, if you look at this bull trend, this was the trend line, and literally as soon as we broke it, it's just been a bear fest. I mean, we've given back 55% of value in the marketplace in 2 weeks. So let's talk about this correction here. So 54%, you're probably like, Bo, that's a little too much, man. I thought that Bitcoin was only used to like 30 to 40% corrections. 54%, like the market's dead, we're going into a bear market. Like, okay, maybe, but 55% corrections are actually something that have happened before in the middle of a bull run, nonetheless, and actually at the same time distance from the halving. If we look at the Bitstamp chart, all right, I was just looking at, because like when I first look at this, I'm like, there's no way that crypto topped this close to the halving, right? It's only been 336 days from the halving from where we topped. If we look at previous cycles, in 2013, we topped at 357 days. So you're like, so this could be the top, right? I mean, this would be the shortest cycle we've ever had. You know, I think that would be super bizarre, especially since the cycle got extremely longer in the second cycle. The second cycle, we went 525 days. So we're about 200 days short of the previous cycle. To me, I think that's super bizarre. Another thing, if we look at the time from the halving to this correction right here, this was a 55% correction right here, guys. 55%. This, 54% correction. 336 days from the halving. 343 days from the halving. 50% correction. So, is this the top? Or is this that mid-cycle 50% correction? I'm under the belief that this is the mid-cycle 50% correction. Now that could just be me coping because I didn't sell enough at the top. But like, I gotta believe that the cycles aren't getting shorter. And with the trillions of liquidity that the Fed printed in the past year, that it's over. Stable coins are at their all-time highs. They've never seen this amount of inflow in stable coins. So like, people are waiting to buy the dip, and all these stables, you know, if they weren't going to redeploy it into crypto, why would they keep it in stables? I mean, I guess you can earn a yield on it, which is nice. You know, if the market's going down, you can just post up in USDC, you earn 6 to 8% yield. Like, maybe that's the main driver of it. But like, my point is we've seen this 50% correction before, mid-cycle, damn near about the same exact time, actually, within 10 days, not even 6 days, 7 days, within a week. We had a same 50% correction last cycle. So the question is, are we entering a bear market for the cycle? You know, are we going down and we put in this complacency shoulder and now we're gonna just nuke to like below 20K again? Is that what people think we're gonna do? We're just gonna give back this whole run? Buyers aren't gonna step in? Like, Maybe, I guess. Or are we in the first sell-off of the cycle before we see the real parabolic bull run, before we see a real blow off top into a bear market? I'm more in the camp that this is probably going to be the case. It lines up perfectly with the previous cycle's 50% drop within a week. I gotta believe that with the trillions of dollars that we printed the past year because of COVID, you know, that's gonna find its way into the crypto markets, and I gotta assume that, you know, this is gonna be just another one of those 50% corrections. So I've been buying. I'm long from 30.8K. I'm long ETH from 1900. I've been buying spot. Really low leverage longs. I, you know, hesitate to step up any leverage at this point in time because this could go lower, right? You know, if it does break this area right here, right? This is kind of that liquidity area that we're stuck in, and we want to see it bounce and find a floor here. If it doesn't, this is the area we're going to be looking at, guys. Right below all-time highs. Now, do you think that's going to happen? I don't know. It could. The amount of FUD that's coming out right now is absolutely insane. Like, I've never seen this amount of FUD before. Travis Kling has never seen this amount of FUD before. Him and his cohorts have never seen this amount of FUD before. Like, it's insane. If we take a look at 2017, 372 days from the halving, we had a 55.2% drop. This cycle, this is this cycle, 373 days from the halving, 52% drop. That's where we're at. So, the question, again, is this the macro top? You know, a rounded, no zero blow off top? Or is this the rounded first sell-off bear trap where everyone thinks the market is over and we find the floor and all of a sudden we just go to a real blow off top? You know, I personally think that's probably what we're going to see. I think we'll probably hopefully find a floor here, maybe get below this to wash out some of the early longs in this area, get a dip below, and then we find a floor and we start rallying back up. Because all that capital sitting on the sidelines, all that capital sitting in stables, if we start to find a floor, they're going to redeploy that capital. And the real test is going to be the real complacency shoulder. You know, you can call this a complacency shoulder, but really this was the initial drop. You know, what I would look for is a bounce up into this 48K, this 45 to 48K area. That's going to be the real test of this bull market. You know, it's probably going to go up here to 45, 48, roll back over, down, test 40K again, and then that's going to be the real test of how strong the trend is, because panic sellers are going to be looking for that complacency bounce to sell into because they didn't sell the top. And, you know, I think that's when, if we do find the floor and we start going back up, that's when we're going to really find out how strong the trend is, if we're still in a bull market. So as of right now, you know, I'm buying spot. I'm leveraged long, really low leverage long from 30.8K. And I'm hoping, praying, you know, you don't want to hope and pray, but like, it just seems super fishy to me. All this FUD happening 370 days from the halving, just like in 2017, we're seeing this rounded 50% correction. Like, I gotta believe that, you know, we're gonna have this summer that's probably just gonna be a sideways summer. Or maybe we get that complacency bounce in the summer and then we correct and then it goes sideways from there, and then maybe that's when we find the floor after the complacency. I don't know. It's going to be super interesting to see. But in my mind, buy in May and walk away. Like, buy now. Go have yourself an awesome summer. We're going to come back in the fall, and prices are going to be rebounding, and we're going to have a crypto winter, just like we did in 2017. Just like we did after this 50% correction, we're going to have crypto winter, where prices go exponentially higher. We have a blow off top, and then we have a multi-year bear market because of the overextension here. You know, if not, then we're probably going to be coming back down to this weekly, right? Every bear market sees us pull down to the weekly. We get to the weekly, and that's where we bounce. And boom, weekly, 200 weekly, bounce. Liquidity crisis in March, bounce. If we do get the bear market, you know, I would expect some lower highs, bounce, capitulation until we bounce off of this. You know, where the 200 will be by then, it'll probably be somewhere up here. You know, if we keep going sideways, making lower lows, by the time 200 weekly will probably be up here in this 18K area maybe. But like, that would just be the weirdest bull market ever, in the bull market where the Fed printed trillions of dollars. Like, that, it just like doesn't make sense to me at all. So maybe I'm coping, maybe not, but I think you got to ask yourself, do you believe that we're putting in this complacency shoulder top? Is this the multi-year bear market we're about to see, or is this the first sell-off bear trap before we mega moon? The stock to flow model would say that this is the first sell-off before the mega moon. That would mean that previous cycles no longer rhyme. They no longer act like each other, you know, if we went into a multi-year bear market from here. Personally don't think that's going to happen, guys. I really don't. Another interesting thing that came out was Goldman Sachs came out with a report on crypto as an asset class. Super comprehensive. I urge you guys to go read it. They go over a lot of details. They go over the demand. They go over how, you know, Ether creates revenue, the token supply. What I thought was really interesting was how Goldman compared the 2017 to 21 cycle, like we're in now, compared it to the 13 to 2016 cycle. And if you compare them, I don't know how you can't be bullish, considering they look very similar, right? We've got this 2013 run, we got the bear market. Okay, we had the bear market. Now we had this 2020 run into 2021, 2016 into 2017. If you look at the rest of the chart from here, it goes from 2,000 to 20,000. So if we're at this, it's going to go from 30,000 to 300,000. You know, that would be the comparable chart here. It wouldn't be that this topped and that, you know, we're going into a multi-year bear market. That wouldn't rhyme with previous cycles. So to me, we're in this 50% drawdown, just like we saw in 2016, before continuation of the cycle. And maybe that's me coping, but like, the amount of FUD that we're seeing is driving this leg down immensely. You're getting it from Ellen, you're getting it from the Pope, you're getting it from China, you're getting it from all of these news sources that are posting the exact same news articles, saying the same exact stuff, using the same exact jargon. I mean, maybe Ripple's putting out the hit, maybe other Bitcoin competitors are trying to, you know, releasing this FUD campaign. I don't know. Or maybe it's just crypto whales, investors trying to get involved and they're suppressing the price. I don't know. Or maybe I'm just coping. We won't know. I think the coming weeks are going to be very telling. If the stock market kind of looks like it's putting in a complacency shoulder, maybe that's Maybe whales know that the stock market's about to crash and they're getting ahead of it in crypto. They're going risk off in crypto. It's a risk asset. It's not going to survive when people are panicking. It's going to see significant dips. The good thing about that is that it's going to provide amazing buy opportunities. The people that were trying to buy at 60K, my family members, my friends, hey, should I buy now? I got a bunch of money, I want to put it into crypto, this is awesome. And they're trying to buy at 50 and 60K. Like, okay, you just got a 50% discount. What are you going to do? Do you still have that conviction, or were you just saying that because the price was going up? I urge you guys to dig into Bitcoin. Why is it important? Well, we got a Fed that just printed trillions of dollars. That liquidity is going somewhere. It's raising our prices of cost of goods. It's going to raise our asset prices as well. Problem is that we've got all this FUD. We've got mass amounts of fear in the market. We've got uncertainty in the stock market. We've got the Fed talking about tightening a little bit. They didn't say they're going to, but there's fear of tightening. And whenever there's tightening, that's when people go risk off. So we'll see what happens. Right now, I'm under the belief that we are right here in the crypto cycle. So that's all I got, guys. I just want to talk about it. There's insane amounts of FUD out there. Be safe. Money isn't everything. Hopefully you guys didn't put everything in the crypto markets and now you're down bad. Like, only invest what you're willing to lose. I don't think it's over. I think we're going to go sideways in the summer. The fall, we're going to start to see some rebounding. And then the winter, that's when we're going to retest the all-time highs and see new highs, is my thesis for the rest of the year. So that's all I really got, guys. You know, if you guys are down bad and you need somebody to talk to, hit me up. BTC Bo on Twitter. I'm still bullish. Yeah, that's all I got. I'll catch you guys in the next video. All right, peace out.